Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. We're coming to you from the heart of Foggy Bottom here, Washington, D.C., George Washington University, the GW School of Business, right here in Duquesne Hall, Duquesne Family Studio. Welcome to any new viewers and welcome back to any of our existing viewers. Thank you so much for tuning in. Remember, disclaimer, entertainment, educational purposes only for these episodes. We will be talking about companies, some of which that we own in our portfolios. We being the GW Investment Institute, this is a GW Investment Institute show. Our students manage real endowment money, and we try to train them as best we can to do that during the semester. And we're in the heart of the fall semester now. We're in September, which can be a challenging month in the markets. But for us, it is a work day, right? It is a month that we go to work on our portfolios. Our students are working feverishly to make sure that we get the analysis done by the end of the semester when we have our stock pitch days. So those will be coming. But we've had a great kickoff to the semester. Our students are very eager to do the work. They're very interested. We just had our first round of presentations, for example, in class, and they have done a fantastic job so far. Shout out to all of our students in Finance 4101 who are working super hard this fall 2025 semester. Thank you. Please keep up the hard work. Today, we're going to be talking about a company in our portfolios. It's not a huge position, but it is, I think, an interesting position. And we've talked about this company before. The reason that I'm bringing it back is because there's been some changes in the market. And I think this company is largely left out of the conversation on the AI front. This company is Qualcomm. The ticker is QCOM. And one of the reasons that I want to talk about it is because as in the prior episode on the general update, we talked about the spectrum deal that was done by EchoStar and Starlink, which is part of SpaceX, and who's going to be a beneficiary of this direct-to-consumer, direct-to-cell technology that effectively uses these low Earth orbit satellites that Starlink has for effectively cell towers. Well, that's a company that's potentially going to benefit is the modem chips, and that is Qualcomm, who's a leader in that 5G category. And so I think it's super important to think about, again, when these new technologies come out or when these things are being commercialized, not necessarily all new technologies, but when these things are being commercialized and consumers can benefit from that, what are the companies that are going to play a role in that? And Qualcomm is going to be one of those companies. And you talk about edge compute, compute on device, and privacy. That's also happening with the Snapdragon chips. And so I do think it's an underappreciated company right now. I do think it's something that as an analyst, as a business person, investor, you should be watching. And it's a position in our portfolios. Excuse me. So I think it's also something that we need to watch. Now, we're going to use the framework, business, management, price, valuation, and balance sheet to cover this company. And, the standard setup, we're going to score it, 1 to 10 for each component, and then, have a composite score. We're going to bring it all together. Now, we might move those around a little bit again as we go through this, but we'll have a composite score at the end. But I think it's a useful framework for you to think about. It's a useful framework to analyze companies. This framework came from Warren Buffett. We tagged on the balance sheet to help us sleep better at night, to make sure that we're evaluating what's the risk in the capital structure. So let's dive in to some basic stats right now for Qualcomm. So what are some basic stats for the company? So market cap, $172 billion. Is that a big company? It's a big company, but it's not $4 trillion like NVIDIA. It's not a $1 trillion company like the Mag 7 or now let's call it Elite 8 with Broadcom included, if you like. So, but that's not a small company, $172 billion. So when we talk about the market cap, obviously we're just trying to get a sense of the scale. Excuse me. So now let's dive in to some revenue numbers. And if you want to talk for a second, I think most people maybe know Qualcomm or at least have heard of it. They're a semiconductor company and telecommunications equipment. They have licensing revenue, and they have for the CDMA and the digital technology. And really, they lead in wireless 5G modems. Say they sell their designs into companies like Apple, for example, and Apple is trying to get rid of their modems, but they're a leader in that category. And they're becoming a leader in edge. And if you saw the recent earnings announcements, they really grew on the automotive side. And so when you talk about edge compute, they're definitely making a statement there. And I think it's worth watching what's happening there. And so this, Internet of Things, the chips that are going to be on these devices, I think Qualcomm is going to be a leader in that, or is a leader right now, and it will likely continue to be a leader. So, excuse me, I think it's at least worth paying close attention to what's happening. So on the business side, let's start diving into some of the numbers now. And so when you talk about, okay, well, what's the revenue for this company? Again, we mentioned $172 billion market cap. Now, revenue right now, if you look through June 29, 2025, and they have a September fiscal year, so the end of their fiscal year is coming up at the end of this month. But the last quarter that they reported was June 2025, $43 billion. Now that's up from 38.9. It's 43.2. That's 15% up. And if you look at what's been happening over the last several years, they had some great years. And if you look at 2021, that 42% growth to 33, and then 31% growth to 44 billion, but then a real big reduction, 35 billion, and minus 19% in 2023, and then a modest growth up to 38 billion and 8.8% in 2024. But the trailing 12 months is better, and the projected at 43 for the full year of 2025 is 12%. So that's definitely a rebound. Now, what's the next year looking like? It looks like not great. Excuse me. So only 2%. So that is not fantastic growth. So if you're looking at the full year 26 September, you're looking at 44.5 billion and 2.1%. Now, as analysts and as business people, this is something that we have to really figure out. Do we think that number is correct? Do we the 12% is basically done, right? I mean, we're one quarter out. But do we think the 26 and the 27 number are going to be any better than people expect? People are only expecting 2% growth for this company. If the automotive continues to grow, if this Internet of Things continues to grow, and if you have an uptick in what's happening in the satellite business, that could really, reinvigorate some growth. Now, the challenge is, one of those things going to happen. Maybe they happen 27, 28. Maybe they just don't happen as much as people thought. Maybe that business doesn't grow, as much as people might think. Excuse me. So this is something that we really have to pay close attention to. This is something that I think is really worth watching. Now, if there's a big divergence, obviously this is a potential opportunity, and so that's why I'm mentioning it. Now let's look down here at the gross profit margins. These are quite good and very steady. So if you look at the gross margins right now, the trailing 12 months at 55, projected at 55 for full year 25 and full year 26. And starting in 21, you're 57.5, 57.8, 55.7, 56.2 through 24, and so. Very good, very steady. Not something that we're concerned about. Very high gross margins given their businesses and the licensing piece and really designing the chips. That's a great business to be in. It's a high margin business. And if you look at the net margins, also very good. And so, but the net margin story is actually improving, and that's something to be optimistic about. Excuse me. So if you look at the net margins now, if you look at the trailing 12 months through June 30, you're talking about 25%. And the projected number is, again, we care about what's happening now, and we care really about what's going to be happening in the future. The full year number, which is the end of the next quarter, which for them is their fiscal year end, 9/30/2025, 30% net margins, very good. And 29 is projected for the full year 26 for the fiscal year. But let's go back. Where have they been? In 21, they were 23. In 22, they were 31. So a really big bumper year there. And 23 and 23. And 24 and 24. I don't know if they were intentional in doing that. And right now they're 25 through 25, but likely to bump up to 30 is the projection. So they'll break out of that cycle and be not 25 and 25, but 30 and 25. So those are excellent too. So if we're thinking about the business, good gross margin, excellent gross margins, excellent net margins. And where's the business being hit? Really, if you talk about the growth numbers, if you think well, I mean, we peaked out sort of a few years ago at 42% in 2021, and we really never recaptured that. We went to 31, and then we went minus 19, and then even on the bounce back, the highest we're projecting right now is 15.8, and we're that's getting the projection is now 12 for the full year, fiscal year through 9/30, and 2% for 26. So not very good. And I think you're going to see that when we get to the valuation. So overall, I think the business is excellent. Let's just mention the free cash flow, generating $11 billion in free cash flow, and that's been consistent over the years. And so great cash flow business, really fantastic there. But again, where your concern is here as an analyst, as a business person, as an investor is, well, if you really can't grow more than 2%, you can't really even grow at the economy level. So that can be a super challenge. So that's something that as an investor we're going to be concerned about. Now, overall, then let's give the business a score and move on to the management. So I think for sure you get a solid 7 here, 6.5, 7. Let's go 6.5 because of the lack of growth. Now, Cristiano Amen is the CEO and has been for several years now. He has done, I think, a relatively good job of getting them back on track. Certainly they've had their sort of scuffles with Apple. Excuse me. And as an investor, you would like to see them have their chips continue to be included in Apple devices. That may or may not work out. And so I think that's going to be challenging. Apple really wants to replace. They're certainly getting in their slim version, their own modem chips now. Qualcomm continues to be a huge market player in the modem space for mobile phones. And so I think it's super important to pay attention to that. And not a huge concern. Seems like, everybody's figuring out how to make this work from here, but obviously impacting the revenue numbers for Qualcomm. But I think has done a relatively decent job and is navigating them into this edge computing, AI, and certainly trying to get further and further down that space. And I think that's an excellent job. And if you look at the growth in the automotive space, I think that definitely tells part of that story. So very good. So we won't spend too much time on this episode on management, but I'd give management a 7 here. I think there's plenty of work to do here and positioning the business. And if you think about what's the top concern, it's the same on the business side. What is management doing about that growth number? That growth number seems to be a little bit too low. But they're partnering with Google on agentic AI for cars. Again, on the automotive side, they definitely seem to be making good progress there, but it's not yet shown up in the overall growth numbers. The mix of things is changing, and automotive is growing, but really not fast enough to make up for everything else. And so I think it's important for us to watch that. All right, let's now move on to the price versus valuation. All right, so if you look at, where are they now on the price versus valuation? This company's a seasoned company, so we can use the PE here. So if you look at the PE and you talk about, where they are and where they are versus other people, I think you may be surprised if you're not following the company. The Ford PE is 13, right? Market's 22 plus, and even round up to 14, 13.42 right now. Excuse me. This is a relatively low PE, and I think part of the reason is because of what's the mix of their products, what's happening in the market, and I think lots of people are thinking that they may get left behind. And so if you look at this valuation, it may look very attractive, and you might say, "Wow, this is a great value." That you have to be careful; it's not a value trap. That can be their earnings could continue to deteriorate or growth rather, and that's a real problem. And so as an analyst, business person, investor, we really need to think about that. We really need to think about what's happening with the business here. And I would say we should absolutely be concerned about that. And so I think the valuation is justified at the moment. But you're not paying a lot for this, which is good. And I think but it's a point to be concerned about. And if you look at the relative valuation versus competitors, So if you look at the average for their business, and that's companies like Realtek, MediaTek, Broadcom, excuse me, Texas Instruments, Intel, the average PE is 53 times. And this is on the trailing, and they're 16, right? So they're way cheaper than a lot of these companies. But again, this could be a value trap for them. And I think that's something that's a big concern for us. Now, we own this company, so our analysts need to be thinking about this. But I think that when you give the valuation, obviously you're going to give it a high score for being cheap, but also balance out with, well, maybe we're missing something. So I would say an 8 on that. So let's move on to the balance sheet. I think this is going to be, not a bad balance sheet. So if you look at what's happening on the cash and cash equivalents, 10 billion. And if you look at over time, they were at 12 and then 6 and then 11 and 13. If you go 21, 22, 23, and 24, and the trailing 12 months up to June 30 at 10. But if you look at the total debt right now, you're talking 14 billion. So net debt of $4 billion, but then you're generating free cash flow of 11 billion. So you're really not that concerned about what's happening there. And that's not something we're super worried about. All right, well, what's the interest coverage ratio? We always want to be at least, over 10. And we're safely over that, 14.4, but not as high as we would like it. I don't think there's a great reason for Qualcomm to have so much debt on their balance sheet. And certainly, I think it boxes them a little bit in on doing new things, doing different things, doing big acquisitions. And as an analyst, you'd like to see them, if you're generating 11 billion in cash, they're buying back shares for sure. But if you're generating 11 billion in cash, pay down some of that debt on the capital allocation side and get aggressive on what you think might be a big M&A target. Get aggressive on, new business lines. But, I think it would be way more comfortable. Again, this is our perspective. This is how we operate our portfolios. We like to be in the net cash category, and they're not far from doing that. They could turn this around and be in the net cash category. So I'm going to ding their balance sheet a little bit here. I would say it's something like a 7. It's okay. It's not a 10. It's not a 9. 6.5, 7, probably a 7. They got net debt on the balance sheet, generating a ton of free cash flow, interest coverage ratio of nearly 15. So again, this kind of keeps us up a little bit at night, but not a ton. But it's certainly not helping us sleep like a baby at night. And so big concern for the growth. Let's go through the components now. Again, here, let maybe wrap up first rather on the balance sheet. Balance sheet, let's give it a 7. So let's go back now. Let's pull them all together and talk about this. So if we think about Qualcomm overall, the business, 2% growth, as I mentioned, not great. Really good margins, gross margins in the 50s, net margins projected to go into the 30s. But really, the concern is the projected growth rate for 2026 at 2.1%. Now, where we could be optimistic, can they get more edge compute? Can they get deeper into the automotive? Can they take advantage of what's happening in the low Earth orbit satellite business that Starlink is now leading? And maybe they have the direct to consumer cell service and the towers being these satellites. We'll see. Maybe they're a big player in that. Maybe that's a source of growth, something that we need to watch. But the business, let's give it a 6. Revised. Let's go to the management. I think let's also give the management a 6. I think they're doing a decent job. I think they could do a better job on the capital allocation side. We talked about on the balance sheet. They could do a better job there. On the valuation, I think you give them maybe a 7 there, but we could also give them a 6 there. Let's be conservative. It looks cheap, but could be cheap for a reason. So you kind of move up, move back down on that. And on the balance sheet, let's also give them a 6. I think the balance sheet could be better, but really that's a 7. So that, maybe that bumps you up, and maybe you give another part a 7. So you end at a 6.5 for everything. If you pull everything together, you give everything a 6.5. I think this is a company that's worth following. I think this is a company that we own for sure and we need to follow. But with the new technologies coming out, low Earth orbit satellites growing and multiplying 6,000 plus now for Starlink and Kuiper, the Kuiper project as part of Amazon growing, I think it's worth paying attention to. They're likely going to be one of the beneficiaries of that growth. Now, will it happen? When it will happen? How fast it will happen? All to be determined as an analyst. So I think you need to keep paying attention, keep doing your work as an analyst. Remember, entertainment purposes only, and we'll see you back on the next episode. That's it for this episode of Market News with Rodney Lake. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.